probably the first 6 months. I want to say I'm taking you back to 2004, 2005. My memory could be a little off, but I was in my cubicle, and someone behind me comes up and he starts looking at the charts, and he asked me. He goes, "Pull up the." He liked pulling up the weekly new high report
Yeah.
in daily graphs. We're going to daily graphs
Yeah.
before Market Smith,
Yeah.
right? And I would pull it up, and he goes, "Okay, space bar, space bar, space bar, space bar, space bar." Space bar into. I'm thinking in my mind, who is this guy? I'm thinking he's a programmer or something, right? He's behind my head. Okay, yeah. He goes, "Stop," and I stop. He goes, "Pull up the weekly chart." And then you see, start looking at the volume. He gets in there. He starts looking at the price. You can just tell that mind is working, right? And he goes, "You see that cup with handle?" And I look at him and go, "Cup with handle where?" I'm learning about a cup with handle. I'm thinking cup with handle, I don't, a cup with handle. I don't see it, but you see it. I guess it's there, right? And he goes, "This is a good one. This is a cup." And he walks away, very casual, jeans, shirt, this and that. And then I asked him, like, "Who is this guy? Is he a programmer?" He goes, "Oh, no." He goes, "That's Bill O'Neill." He goes, "That is the master. That is the guru," kind of thing. And when he described it that way, because Bill will always be downstairs, we were upstairs, right,
Yeah.
with daily graphs. And uh, I appreciate that. But what I got from that whole experience was how he looked at the price bar and the volume bar and how it would react around the base. And I'm like, I wanted to ask him. Eventually, started reading more. I read the book a couple times. I read the book 5 times and started realizing he was looking for some type of price consolidation, and he was looking for price action and volume action to be on the same page. If it's pulling back on low volume, if it's moving up on a high above average volume, so forth, to find that support. But it was just a great experience. I saw it live. I saw greatness, and when you're around greatness, you just understood. Wow, that's what he was looking for.
Yeah, and it also brings up another interesting lesson, and I think this is something that I learned when I started in house, because I was a customer for many years, and back then I was a customer in 2004, 2005. But you'll use a screen. You pulled up the weekly new high report, which is in Market Smith. We brought those over from Daily Graphs years ago, but you're after that, once you pull up a screen or pull up a report, a lot of times you're first looking at the technicals to
Yes.
see if there is a setup. Now we have pattern recognition and things like that make it easier, but that was kind of something interesting where you're going through a lot of charts, and then if you see a setup, if you see a cup with handle, now you start digging in further. What are the ratings? How what's the story? Things like that, and you start keep filtering it down that way. But it's really interesting. It enables you to look at a lot of stocks in a short amount
Right.
of time and really focus on the ones that have potential.
And Arish, to add to that, he would look at the technicals on the weekly chart, and he'll look at the fundamentals. That's the beauty of the chart that he created.
Mhm.
That's a work of art. It's the fundamentals and on one side and the technicals on the other side. And he went back and forth, and it was able to see this was a winning stock. This was something that I wish I remember which stock he was, but I was kind of like, "Who is this guy?" kind of thing.
Right.
I, I
Right.
should I should have shown him a lot more respect. I'm like, you don't. In my mind, I thought, you don't have a computer. You don't have a. What's going on?
Yeah.
But Arnie, let's go into kind of that. You brought up the weekly chart of Market Smith.
Mhm.
Maybe just briefly, just talk about, because Bill O'Neill designed that weekly chart, and he
Yeah.
designed it
Absolutely.
for everyday people like us.
Very
Um,
specific. What
exactly.
he
So
was looking for.
talk a little bit about what made that weekly chart so special, or makes it.
What over the years in the beginning, the first, and this takes a couple years to get used to weekly charts, you guys. It's not going to happen overnight because we're fixed to go with quick money. Everyone thinks the stock market is, you buy it here, it's supposed to go up. It doesn't work like that. Good trading is boring, right? And that's the beauty behind the weekly chart. It keeps you away from getting shaken out. Now, what he was able to do was he was able to capture the whole story of a company through those specific data points, and he never changed. Those data points that you see that took years of studying since 1880, he went back and started studying the winning stocks. And if you ask him, and this question was asked when he would come in and give speeches with our research staff as well, because we're all in the same room. He was like, everything that you need to know to make a decision on on a company is going to be on the weekly chart, and he would always emphasize that. And if he said it, that's law, right? For me, it was just kind of that's it, right? And it's so true. It just kept you informed. It kept you in tune with in a very pure the price action of a stock. You did not get shaken out, and shakeouts were becoming more and more common with high frequency trading. Right, we started hearing about these algorithm technology started improving, and this was back in like 2008, 2000. Everything started getting faster. Smartphones, Androids, the app. You can make trades very quickly. Algorithms were being created, right? And the weekly chart kept you in. If you look at and I tell this to everyone, especially when I'm coaching, I'm like, if you compare that stock now pull up the daily chart, two different worlds.
Yeah.
Mhm.
You would have left. You would have sold out of that one. You would have not slept. And this is just another example. You would not have slept with this daily chart. But if you look at the weekly chart, you'd have been perfectly fine. Oh, okay. Nice
Mhm.
pullback, lower volume. Okay. As it's going up, volume's picking up. As it's going down, volume's drawing up, which is a great sign. So those are little clues on why. And then the reason why is he didn't look at other types of, and he really never looked at other indicators because Scott, and how I know Scott would look at price and volume, right? Volume was the emotion of the buying part. And we looked at the weeklies all the time.
Mhm. Talk a little bit more about this whole idea of the emotional component of investing, because I mean that's one of the things that I think a lot of people struggle with at first is, you're putting your hard-earned money, into this, and you're getting tossed to and fro sometimes, and sometimes it's hard, and you've got all this noise out there telling you, oh, this is going on, these people are bullish, this is bearish, or you've got sometimes a lot of indicators. The MACDs are giving you a bullish signal, and the stochastics are giving you a bearish signal, and you know what have you. So can you talk a little bit about the
For
emotional
first,
component?
yeah, the emotion component is something that took me years to master. I'm a very emotional person. It's funny. Ali call it the goody giddy kind of thing. When you get all excited, you're making all this money, right? Or you're having a week in the market. Um, you have to you. The biggest thing I think what made Bill so great was his discipline. And I hear
Mhm.
stories of how disciplined he was. And Justin, you know that you worked very, very closely with him, how disciplined he was. And Scott would tell me a story how disciplined he was. But whether he was up or down, you wouldn't be able to tell. You
Mhm.
couldn't tell, right? And he was careful to be He was careful on the news, what was happening in a company. He would be very careful what the analyst was saying because that could judge your way of thinking. One thing I learned is in the beginning, I used to be like, "What do you think of this stock? What do you think of that stock? What do you think of that stock?" And I used to get like different answers and that got into my head, right? That would have an effect on how I manage my position, right? I didn't have that conviction. So what I realized in order for me to have that conviction, hold on to the stock, and if I believed in the company, because if I bought a stock, I believed in the company, right? I did my
Mhm.
research, found out the story that it had. Was it changing the way we do things, changing the way we live? But if you didn't have that conviction, you would have been shaken out very easily. The emotional side was very, very important. It would make or break you when it comes to holding a stock, and especially the way we bought our stocks. Our system here at IBD, we were very aggressive investors. We buy high, sell higher,
Mhm.
and a lot of retail investors didn't feel comfortable with that, with that approach in investing. So, yeah, the emotion side is something that takes years to master. You have to trust the data. You have to trust the patterns. And in the end, you have to answer certain questions about a specific company. Is it changing the way we do things? Is it changing the way we live? And if you can say yes, everything will fall in line. But at the same time, you also have to be patient. Patient. Don't go after stocks. Let the stocks come to you. Don't buy overextended stocks. There's a
Mhm.
right way of timing the market, and that was one of the big things about Bill when he would do he would say you can time the market. The market can be timed. That's why we look at distribution days. That's why we look at patterns, and we're looking for above average volume when it goes through that resistance level into new highs.